Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I will look at some of the most interesting developments for the upcoming week. Now this video has been brought to you by Orbex. I will look at the euro dollar, Aussie dollar, dollar yen, gold and crude oil, and also a quick look at dollar CAD. So this will be the final edition of this year. This will be the final video, so if you have any questions or any concerns, please contact me on Twitter, because next week or the week after there will be no video updates for Orbex. Now let's take a look on firstly on euro dollar. Now euro dollar is still in a very big downtrend, as you can see here on a monthly chart. So we will be expecting more weakness next year, but after this triangle consolidation will complete. So in the near future, let's say in the next few weeks, we will be looking for potential bottom formation. I still think that there is a room for retest of this 61.8% retracement here that comes around this wave X swing low back from June of 2020. So the final dip here could be coming possibly by the end of December. Why? Because here notice that I am tracking a fourth wave. It's a very tight range, still very choppy. Not really directional moves here. So in my opinion, this can be a way for maybe a triangle, maybe a deeper way for towards 1.14 level. But in either case, I think that there is room still for a drop into a fifth wave, while the market should stay below 1536, because that's invalidation level, because wave 4 must not trade in territory of a wave 1. But if this suddenly happens, then we will know that market has temporary bottom and that much higher prices could follow early next year. Now let's take a look also we set on Aussie dollar. Now Australian dollar has seen some very nice recovery here after a fifth wave. We've been then looking and also highlighting this break out of this downward channel that confirmed end of a fifth wave. Then we follow this wave 2 or wave B corrective setback, which unfolded very nicely and sent prices to a new swing high here. At the same time, we have seen, or we are still observing, this divergence line or the RSI. So as long as we are holding this line, I think that there is still a chance for a higher prices. Now if maybe we are already in wave 3 or wave C, now the minimum upward objections here for a corrective price action would be around 0.70 to 80. Why? Because that's the third leg where equals to wave to the first leg. Okay, but if maybe that's going to be extended leg like a wave 3, and if we see, let's say, move towards or above 7300, then of course watch out for 161.8, because that's the typical target for wave 3 of an impulsive recovery. Now if suddenly, let's say, the market just will stay sideways for the next few sessions, maybe even come a little bit lower early next week, then watch out for another potential bounce later from 1780 or 90 level. That's a very nice potential support if going to be retested. In such case, I would be looking for a flat correction here in wave 2 or wave B. So in either case, I think that Aussie dollar could see more upside still this month. Now let's take a look also on dollar yen. Now dollar yen is finally coming to the downside. I've been tracking this one for a while and highlighted that this looks like a corrective price action after previously very sharp drop that has an impulsive personality. So if you look at the or compare the current rise, okay, which is, as you can see, very overlapping compared to the previous drop, you can clearly see that this was a very sharp move to the downside, while the rise is now struggling. So bulls are struggling here, meaning that this is probably impulse, this was probably correction based on personality. So if we respect the price action, then we know that corrections, whenever they are finished, they should send or cause again impulsive reaction into the same direction of the like the previous impulse, and this was to the downside. So something similar is what we expect here for wave C, maybe even wave 3. Also keep in mind that here on a daily chart we had a very strong divergence. We went out of this out of this channel. So in my opinion, yes, there is a chance for market to come lower here in the next few weeks. Now finally, we are seeing a reversal higher on metals. So what is going on, or where are we at the moment? Well, I'm still looking here for a big triangle. As you know, we came to the downside recently. Now we are trying to bottom, but notice that we are still in the middle of this triangle range. Okay, so it suggests that triangle still is not actually confirmed as a completed. Yes, we are tracking wave E, but even wave E here should be made by 3 waves. So I think that this is still only ongoing wave E, meaning that current rise can still be limited. So here we have this 4-hour time frame chart where I can count 5 waves down here as the beginning of this wave E, and then you label this as a wave A, and now you are in a corrective recovery as wave B that belongs to wave E. So wave E, as I said earlier, should be made by 3 waves. So in my opinion, there still can be limited upside. Of course, even this recovery is sharp, meaning that most likely we'll see higher prices here, but 1830 or 1850 is the area where we could expect a reversal back to the downside. Okay, so for now, yes, metals are very strong, and on the intraday basis we could see more upside after this setback here, but eventually probably we will not see higher prices than 1850. Now let's take a look also on crude oil. Now crude oil is here in a downtrend actually, or I should say maybe sideways price action, since uptrend clearly is defined by an impulse, while the current drop is first leg of a corrective subdivision that we expect. So next year I'm thinking about drop towards 60, maybe even $50 per barrel. So it's ongoing, it's going to be ongoing consolidation here. Now for now we are still here in a wave B. Now the reason for recovery here for wave B could be after this fear has settled down regarding Omicron. We also haven't seen any changes in demand. Mobility is still going well, so I think that this is the reason why the crude oil is coming back to the upside, but maybe we'll not see higher prices than $78-79 per barrel within this corrective pullback. But so far on the intraday chart, yes, there is room for more upside, even if this is a correction. Why? Because notice that the first leg here was made by 5 subwaves. What the drop or pullback after this 5-wave movement to this area to 73, we have seen only a 3-wave drop. So this is now correction, while the previous rise was an impulse. So again, what we are looking for, whenever you spot an impulsive price action, then only 3 waves down, you know in which direction we should look for. Probably in the same direction, meaning back to the upside. Okay, so I'm looking here for a wave C rally. 61.8% is usually the perfect or textbook fib level where the correction could stop. But of course there is room for even for higher prices towards $79, as I said earlier, which is also the swing high here, and as well the swing low was not far away here. So that's the perfect or textbook's resistance area for the next potential sell-off on crude oil. But for now, as I said, there's room for more upside because I see incomplete or ongoing corrective recovery, and these higher prices for a wave C could actually occur very soon. I mean, break above 70 probably puts 75-76 dollars in play pretty fast. Okay, so if crude oil is really going to see more upside, at least in the near term, then maybe watch out for dollar cat to see more weakness. Here on the 4-hour chart we can see a very nice 5 waves up away from those October levels to this early December highs, and this looks like a completed structure. Okay, while the current drop is quite sharp on the intraday basis, so more upside on crude oil will probably cause more weakness here on dollar cat. Even if just temporary, there is room for weakness all the way back to this termination point of wave 4, because normally when a 5-wave movement or 5-wave sequence is finished, then you see sharp reversal. Just be aware that this reversal, even if it's corrective, can retrace all the way back to the termination point of a wave 4 of a lower degree, and that's the area we should be looking for. So it will be interesting to see if maybe crude oil will be already at $76-79 per barrel, while dollar CAD will be testing this support. So that should be key levels for bulls to stay in place, if they will stay in play. For now, I think that intraday structures suggest that we are slowing down the bulls and that we are headed most likely slightly lower after any intraday bounces here. Okay, traders, thank you very much for your attention. I really hope that you enjoyed this video, and again, talk to you soon. Bye.